All set?
I sure hope so. We're going to do the best we can.
All right. Let's go ahead and get this started. We have a lot of ground to cover today. And we're going to be talking about PPP because things have changed over the weekend. In fact, a lot of things changed over the weekend. You can't prepare too far in advance for this because too much is jumping around. We're going to talk about healthy at work and whether you're wearing your basic mask, surgery mask, or you've got your Yves Saint Laurent or Ralph Lauren maybe mask, even if you're ready to go into surgery right now, and you have your COVID-19 N95 mask. All of these are important, and it's important to be wearing these when we're out in public, I think, and it's certainly important that we let our employees know that we're going to take care of them. They need to have the perception that we're going to keep them safe, and they're going to need to know we're keeping them safe by giving them plenty of protective equipment and all the other kinds of things to ensure that they're safe at work. We're going to be talking about that. We've got a lot of legal update. We expect to run about 2 hours today, and we're just delighted you're with us. Let's flip to the next slide. We did not invite any special guests today because we felt like we didn't have time. It's going to be pretty intense. Watch the slides closely. There's a lot of information on them. We will get those out to you as quickly as we can later today, in fact, and we're going to take a lot of questions, so keep them coming in. You all know James Morris. Jim has been working with us all along on this. He is just inundated with activity with regard to COVID-19, as are all of us, because we run HR for a lot of companies. So we're approaching this in healthcare, in real estate, in banking, and just all kinds of different groups. I've got Chase is running the controls on this. Allison is here to help with questions, and so is Autumn. So Jim, let's hit the ground running. Go ahead and take us away. We're going to talk about PPP, Payroll Protection Plan. What do you have?
All right. So I'm going to apologize ahead of time. Somehow my mouse control is not here, so I'm doing it from the computer, which I'm not used to. So it might be a little glitchy from time to time, but we're going to jump right into it because huge things have happened. So I wanted to recap first, and I'll tell you what the situation is. So I've been telling you week to week for the past 6 or 7 weeks about the SBA and the Treasury bouncing back and forth frequently asked questions and promising updates. Just want to follow up with the recap. There have been substantial questions with regard to what a good faith application is. We talked about the 9.75 versus the 8-week comparison. We've talked about the PPP monies that were required to be expended during the 8 weeks, and what happens if you get this on a Wednesday and payroll's on a Friday, or it's not for 2 weeks. How do we handle that? And then we also talked about 75% had to be paid toward payroll and what you could do with the rest of it. Payroll was not well defined. And also leases, term leases was undefined, so that's not a typo. The term leases was undefined, and that raised concern among some. I had told you, if you recall, I think in week 3, leases included vehicles, copiers, printers, any type of machinery, mechanical, factory, and so on, because it literally said personal or real property leases. So I knew, or it said personal or real property rentals or leases. So I knew what it meant, but nobody had clarified. They have now. So after these weeks of concerns and us talking about it and me telling you I don't have anything updating you on it other than more frequently asked questions and more confusing and conflicting guidance from everybody and their brother and every agency that didn't know what each other were talking about, and threats of audits and criminal sentences, sanctions, and so on, they finally came out with two huge updates. One of these, if you weren't awake over the weekend or weren't connected over the weekend, chances are you don't know about this, but it is the single largest announcement since the FFCRA and CARES Act were adopted. If you took a PPP loan Friday night at 7 o'clock, the Treasury Department and SBA came out with guidance. Ironically, the Treasury Department didn't announce that guidance until Sunday, and SBA tucked it under its COVID-19 or coronavirus update information and didn't tell anybody. So if you weren't looking for it, you didn't find it until right now. Here are the two huge updates. So, whoops, sorry. First, Treasury announced on Wednesday of last week 2 new guidance points. As you recall, I had raised the issue about the $2 million last Monday that I thought that was coming out. They came out with an express declaration about $2 million, but this one is a very large one. If your loan is under $2 million, you are deemed to need the money. What that means is there is a rebuttable presumption under the law that you will not be scrutinized on the need for the money. Now, that doesn't mean go out and spend like a drunk sailor. What it means is that the Treasury Department is not going to audit anyone who took a loan of $1,999,999 or less. If you took a loan of $2 million, you're in trouble. I'm sorry, but that's just the gist of it. And I've been giving someone guidance I've been giving them guidance for six to 7 weeks now. On Saturday, I sent them guidance and said, see, I told you so, and you need to backtrack and fix what you did because I'm very concerned about how you spent your money and you have a loan over $2 million. But the way this works, and I'm going to read it directly, is any borrower that together with its affiliates received PPP loans with an original principal amount of less than $2 million will be deemed to have made the required certification, required certification concerning the necessity of the loan request in good faith. It's still rebuttable, so still be careful about the documentation. However, you're not going to have an audit and the Treasury is not going to commence an investigation. Your lender can and your lender may, depending on how you handle things. So we're going to cover a little bit of that a little bit later on the second huge announcement that they made Friday night. Affiliates, you still need to verify total amounts do not exceed $2 million in the affiliate language. I'm not going through a whole lot of that because of how specialized that is. But there is new affiliate language. I think it came out about 10 days ago about how you determine an actual affiliate. Those entities that fall above the $2 million threshold, you have a target on your back. You need to be getting staunch tax advice, accounting advice, and legal advice because it is a real issue. It should not have been, and I have been on record saying that when the Treasury of the Secretary Mnuchin says everybody who can qualify should qualify and should take every penny they possibly can because that's what it's for. And that was on April the 15th or April the 17th. You should be able to do what you do to take whatever money they make available. I don't care whether you're Steak and Shake or Ruth's Chris or anybody else. If it's available, you didn't do anything wrong in applying for it. So that's just my own personal comment. Documentation of every portion of the requirements is critical and will continue to be critical. By that, what I mean is if you made a decision, make sure you know what date you made the decision on and what the guidance is on that date. Document why you made that decision and why you did what you did. When we get through the rest of this, you'll see why. Secondly, as I promised last week when we had our May 11th meeting, I said there's no guidance out there. Your deadline is the 14th, and I'm pretty darn sure they'll extend that deadline because it's ridiculous to have an amnesty deadline when they have no update to the guidelines that they said they would have in place. I just want everybody to know that what we're getting ready to talk about, this brand new PPP guidance, was mandated to be issued by the SBA and the Treasury Department no later than the end of April. And so they are 2.5 weeks late on this. And yet they are forcing companies that got this 8 weeks ago to be complying with it throughout the 8 weeks. You've got a huge defense to what they've done here because they've botched the rollout of this guidance that you're getting ready to see. So at the bottom, I kind of give that away to you. There is a brand new update on May the 15th at 7 p.m. I do believe that we're going to end up with the amnesty deadline being extended another week or at least a few days, because extending it to today is kind of ridiculous when you send brand new guidance on at 7 o'clock at night. So let's get into that. Friday night, they posted quietly brand new PPP calculation guidance for your forgiveness of your loan. Treasury updated on the evening of Saturday. Key takeaways from this huge update, and I don't capitalize huge lightly. This is a massive update on all of the questions I've been raising for 8 straight weeks or 7 straight weeks. First, this is big, the incurred and paid language regarding the 8-week period. We had questions, like I said, our payroll doesn't start until 2 weeks from now. How do I do that? I even gave people guidance. I said this is common sense, but until the guidance comes out, cut a 3-day check, cut a 10-day check, cut one on day 1, and start rolling to make sure you address this. However, they finally came out with the guidance they should have at the very beginning. This isn't rocket science. I don't know why it took so long, except if you get 100 attorneys in the small business and treasury department together, you've got 100 opinions, and most of those opinions stink, and some of you know what I mean by that. So the incurred and paid language, if you incur an expense, this is payroll only. If you incur payroll during the 8-week period, actually, no, it's not. I need to clarify that. If you incur an expense or you pay an expense, either one, during an 8-week, you can include both of those. That's huge. So there was a question about, well, what if the utilities are paid outside of the 8 weeks, but they were incurred for heat during the 8 weeks? Pay it. Well, what if it was we got the PPP on April 10th, and we got a bill from March on April 11th? You're allowed to pay that too. It expands what you can pay, as long as it is paid in due course at the next regularly scheduled and it had a tangential relationship to the 8-week period. Secondly, new guidance is provided regarding the borrower-friendly interpretation of both the FTE employee and wage and salary reduction provisions. Now, you're going to see a thing down below. FTE is full-time equivalency calculation. It is an accounting term. I don't like it, and I don't like their definition of it, because all they define it as is full-time equivalency. They don't tell us what that is. Well, I can tell you under certain of the federal guidelines, if you're paying more than 32 hours, that's full-time. So, or 30 hours, I believe. So you'll see in here some calculations on 75%. I think that's what they pulled that off of, is the 30 hours being a full-time employee, but that's in here as well. There's a ban on using bonuses to owner employees to fill shortfalls in eligible expenses used to apply for loan forgiveness. Before any of you ask, I don't know. Whoops, sorry about that, if you're seeing things on the screen. I don't know, because my question after I saw this was, wait a minute, does that mean I can use bonuses for non-employer or non-owner employees? Then there's a whole list of brand new questions coming out this morning. I've been trying to check on my accounting, including the AICPA, the Association of Independent CPAs, to see if they had any guidance on it. What is an owner employee? Does that include children? Does that include spouses? Does that include other people that are related to the owners? It's an undefined term. So, but the interesting thing here is it says you can't use bonuses for owners. It doesn't say anything about employees. Well, your application talked about not paying bonuses that were not already similar to the ones you had in the past in the calculations, but now this guidance seems to suggest a potential of bonuses being paid. Third, covered rent, and I said this on week 2 or week 3, but now they finally caught up with what I told you. Covered rent obligations do include both real and personal property, so that includes your vehicles if those are business owned, or I'm sorry, business leased, printers, copiers, phones, phone leases, invoice or billed for anything that's a rental. Be careful if you have something you own, because remember, as we talked about in week 2 or week 3, it does not include the principal, it only includes the interest. Also, it uses, and this is the huge part, the alternative payroll covered period. That is where we talked about in the very first bullet when I started to talk about the fact that there are 2 different periods you can utilize. One is the covered period, which is the 8 weeks from the date you received the loan through the 8 weeks or 56 days after. The alternative is allowed for payroll only. It is not used for rent, utilities, mortgages, anything else. But the alternative payroll covered period is if you normally use a weekly, bi-weekly, or monthly, quarterly, anything like that payroll, you have the ability to select an alternative 8-week period that includes that pay period. So hypothetically, you get your loan on April 10th, but you don't run payroll until April 23rd. You can start the time period in that April 23rd and run the 8 weeks from that time period. Question from some have been, and not really answers yet other than me reading it, there are no frequently asked questions yet from the SBA and Treasury. What if we pay monthly? It's been very heavily suggested, no guidance yet. Run a special payroll during this 8 weeks, or run a 56-day, or run a monthly, and then the 36-day, 35-day period. But make sure you get paid during that time period. Also, if a payroll runs outside of the time period, you get to run those days in the next payroll. So hypothetically, if you're running bi-weekly, you can run the bi-weekly and have 5 days, 3 days, whatever the time period is, be in that next regularly paid payroll and cover it appropriately on your PPP and get reimbursed. So it's no longer a harsh 8-week screwed if you got it on a Wednesday and you don't run payroll until Saturday or Friday or whatever. So that's the brand new. All right, whoops, what was that at the bottom? They also, the clarification of the 75% payroll, you've heard me for 2 weeks talk about that. That's the 9.75. They threw in the word that they seem to have missed in the frequently asked questions, which is annualized. So you annualize and then divide by the number of weeks. So if you take the first quarter of 2020, 13 weeks in that quarter, you then multiply that out to get your annualized, and then divide it by 52 to get your weekly, then multiply by 8 to get your PPP. So they screwed it up, but they said, whoops, they just waited a month to tell us. For those of you that did the first PPP, I think I already covered 2 weeks ago, you got screwed. And I made that comment. They haven't fixed that. All right, computing payroll costs and forgiveness. First, payroll period is the 8 weeks immediately following. I'm sorry, the covered period is the 8 weeks immediately following. They've come up with this alternative payroll period. Generally, only payroll-related items are allowed in this special payroll period. That's what I've called it. That's not what they call it. They call it the alternative payroll covered period. They then have a form, and like I said, I have no mouse, but I'm going to see if I can move this over. I may just tell you where it is and have you pull it up yourself later. Here it is. So I'm not going to be great at this, pulling it over. Nope, I'm not able to pull it over. On the SBA website, they have a full-blown protection period. It is on there. You need to take a look at it. It has everything on there, including the calculations, the application, worksheet, and it is extraordinarily confusing. Why? Because it was developed by the Internal Revenue Service. So they made it as ridiculously confusing as possible with worksheets and grabbing from box 1 and table 2 and box 3 and table 1, and they used terms that are undefined, and I'm sorry for that, but we're going to go through it the best we can. So, borrowers, you have to provide the following information if you're seeking forgiveness. This is not really shocking, but it is all eligible payroll costs incurred or paid, not and. Incurred or paid during either the covered period or the payroll period. Then the amount of pre-existing business mortgage during the covered period, you'll notice that's not the payroll period. You cannot play games with your pre-existing mortgage, pre-existing personal real property leases, or your utility payments, with the exception of what I talked about before. If you have one of those that pops up after but was incurred in part during, you get to include that. Rent, heat, electric, whatever it might be. Payroll costs compared on an annualized basis, and there's also safe harbor provisions included. The full-time equivalency, as you heard me say a couple of slides ago, it's still really murky. It's a little confusing because they define everything you can imagine, including business, employer, employee, everything. They didn't bother to define full-time equivalency, and I don't like the way it's listed in there, but that's where we are. Eligible payroll costs, like I said, or you see that emphasized. Subtle wording has major implications because the CARES Act actually talks about you have to pick one or the other, meaning, I'm sorry, they said you had to have both incurred and paid in the same. That's why we were talking about all of the things that you had to do. Make sure that you cut a special paycheck period. You don't have to do that now. The SBA had the authority to loosen some of the regulations. I'm not positive about this one, but it was a good one for those that took it. So eligible costs that are paid or incurred are both covered. Then it also, by doing that, they eliminated the need for the special payroll period, and borrowers can only count expenses once. They listed that in every single part. Basically what that means is don't double dip. Don't try to do something that was incurred and then charge it as a paid. You've got to do one or the other. Owner bonuses are covered at the bottom. No matter how you pay an owner, whether it's bonuses or pay, you are capped at $15,385 because that annualized is $100,000 for the year, and that's the maximum anybody can be paid. Eligible non-payroll costs. This is where it gets really interesting and really confusing. So there's an eligible non-payroll cost must be paid or incurred. We talked about that being either outside one way or the other. The alternative payroll period is not allowed to be utilized. Eligible non-payroll costs cannot exceed 25% of the total forgiveness amount, not the total loan amount. So that's new. This has been, well, I'll get to that in just a second. First, the payroll cost, 75%, applies only to the maximum forgiveness, not to the eligibility itself. If some of you had asked and frequently asked questions, what if we have 74% or 70% toward payroll? My interpretation of the guidelines has been throughout that I thought that you were okay, that you were not going to flat out lose it. But there were lenders out there and some attorneys that were saying it was a cliff. And by what they mean by a cliff is if you went to 74%, you lost the entire PPP forgiveness. I had been telling you that I thought that it was a pro rata that you would only get, but there were some out there that were saying that, and they've clarified, no, you do not lose it. You get whatever the percentage is. And then these percentages get really, really, really murky, and I'm going to tell you one of those right now. The 25% non-payroll applies to the cap on forgiveness, not on the total original loan amount. Some organizations, there's a Forbes article out there, I'd like you to take a look at if you're interested in it, that's talking about a 33 1/3 factor as against payroll. And their example was given that, and they used a weird example, I wish they hadn't, but you get a $100,000 loan, you use $70,000 toward payroll. They then did a third, and I've been trying to figure out how they came up with a third, because the only thing I can come up with is a 25% or 75% is 75%, which is around 56. I can't come up with a third, and so I've tried to reach out to the expert that wrote that and see if that was a typographical error and it should have said 25. But they went ahead and went with a third, and they gave an example. You get a $100,000 PPP, you spend $70,000 on payroll, you're then entitled to That means you spend $30,000 on non-payroll, and you do a multiplication they came out with, you'll get a total of $93,333 forgiven, and $6,667 would not be. I don't know how they came up with that, but they probably have a whole team that are smarter than I am, and they came up with this 25% non-payroll equals a third of the amount that you took. And I don't get that yet, but I understand I've been trying all weekend long just to keep people updated on this and answer questions once I forwarded this to them. So I've not gotten into the accounting functions. And I think I told everybody in week one, I am not a tax specialist. I don't like doing people's taxes. So please understand that I'm not giving tax guidance. So contact your accountant on anything that you want to do on this before you do it. The American Institute for, the association it's AICPA. I think it's the Association of Independent CPAs. They came out, or they're coming out with a new calculator today. They had one brand new on Thursday of last week. They were very proud of it, advertised it everywhere, and then the guidance came out Friday night. When the guidance came out Friday night, they were screwed, and they pulled it down and said, yeah, we'll put it back up. They've not gotten it up yet. That one's promised today. I fully expect them to come up with it today. And I'm going to be interested to see how they handle this 33 1/3 calculation right here, because I don't think that they'll be able to have that on there. I think it's a 25, but if they explain it, I'll do something afterwards to let you know. Here's the funny one is SBA and Treasury have said that they have new guidance that will come out about their Friday night release, and stay tuned because they'll give you more explanations. Don't hold your breath, because like I said, the last one was 3 weeks late, and now they're promising new. I doubt we'll get it anytime soon. It creates a lot of problems for those of you that got the first round of the PPP. Your lenders are very angry as well. A lot of them have filed some things saying the 75% shouldn't apply to the first group. They should be at a 2/3 or something less because of how screwed up this whole thing is. So problems for those, I just said that. So documentation is the key. Those who've already expended their money prior to the new guidance, I would be hammering your lender that this is an unfair after the fact application that you need some type of release from, because you can't comply with something that gets dumped on you 7.5 weeks in. All right, so that's the PPP. And I can't keep up with the chat because I'm running the whole thing in terms of talking, so I can't read and talk and see it, and I don't have a mouse.
Great. We've gotten quite a few questions. Good work. I'm glad you went through all that. A lot of detail. Allison or Autumn, you want to lead off and share some questions?
Yeah, so a lot of the questions we've received are about the health requirements and healthy at work. So one of the PPP questions we got, though, is about self-insured healthcare plans and how those expenses can be addressed under the PPP.
Yeah, so there's brand new guidance on all of that. There's a calculation form. It's like 14 pages long. Here's my copy that I've been trying to keep up with. Yes, it was upside down. Yes, it's probably on purpose because of how confusing this thing is. But there is a whole section on there about what is and is not covered. Now, the one thing that seems to not be covered, and I was looking for the page to tell you where to look for that. It looks like it's on page 10 of 14, where they talk about the particular health coverage. The one thing that is not covered is if you are self-employed or in a partnership and not an employee. Some of your health care, some of your retirement, some of your items are not covered in the paycheck part. You would have to put those down below the line in the non-payroll or not included at all. And there's still questions on that. But for your rank and file self-insured health, it appears to be covered, but don't go on my guidance. Like I said, this is so brand new. It was impossible to follow where they're saying grab it from this box and pull it over here. I had to print it instead of trying to do it online just to be able to read all of the go back here, go here. I put them all out on a big table to try to figure out where everything was. So it's in there where they describe all of what is and is not included. And I think that page may be wrong, actually. I'll look while you're asking the next one to see if I can find it. That page had some information, but I remember a specific description of health, and I'll try to find it.
Great.
Yeah, don't go through the healthy at work, because that's the whole next section, and then I'll answer the questions I don't cover.
Great. Okay. Oh, one literally just came in. So prior to receiving PPP, we were partially shut down and rewarded those who were working with additional incentive pay. Do you believe if we continued this in a bonus format to reward those who physically came to work while others did not, that we would be okay with forgiveness? They're not actually calling it hazard pay.
Right, and so that's in that murky area where they say you can't give bonuses to owners. I'm a little surprised to see that comment, because my understanding that they intended in this, at least from the wording of the CARES Act, was no bonuses. And I'm wondering if they did this little caveat because they know they screwed things up on this 8-week time period and trying to get people above the 75% threshold by allowing some bonuses. But this is so brand new with no additional guidance. I'm not positive you'll be able to do the bonuses and get those credited back to you. I'm a little concerned in telling you, oh, sure, yeah, go ahead and do that, because I know that the guidance from week 1 was, look, we want people back to work. We don't want you handing out bonuses to your pet employees and not to everybody. So I would be cautious on that, but I would expect in the next day or two, we're going to get a lot more feedback, and you're going to get some accountants and some tax consultants weighing in on what this means and why they would say no owner bonuses, but not include no bonuses to anyone else, or no bonuses that are not in the regular course of business. I will say the more that you were paying bonuses before, the better off you'll be if you're paying them now. Because what you're going to try to show is that there's a legitimate ongoing need to keep your employees working. The ones I'm worried about, and the one I gave guidance on this weekend and for the last 6 weeks, is writing a letter to your employees saying, hey, we don't need you, but we got free money. So if you want to sit at home and get paid here, just click here and you'll get your free money. That scares the heck out of me. I would not do that, because you have a certification in this new one. There's a new certification you have to click when you submit this. And if I can find it, I want to read it to you, because it literally says that you hereby certify. I can't find it. Sorry. You hereby certify that the monies that you took were expressly for the purposes of continuing your company, and not just to allow people to sit at home. So it didn't say not to sit at home, but it literally said that you're certifying that you needed this money and it was for operations. And so I can't find it. I'm sorry, 14 pages I'm trying to look as I go, and it's, trust me, it's in there. They require initials going to the lender that say, yes, you did this, yes, you needed this, and that's a legitimate application. And I think if you start going into, I just kept my employees at home. Well, why did you need to keep them at home? Did you train them? Did you require them to work? Nope, I just had them being paid to stay at home. I can see that being a problem. So just take a look at it. It's a lot of guidance and a lot of information on it.
And we had, can you tell us what the name of that document you're referencing is about the, I believe that's the one about self-insured healthcare plan?
Yeah, let me see if I can get to that screen. Sorry, my computers are all messed up. Nope, that didn't work. It is literally at the SBA. Is that it? Oh, I've got it. Hold on. I've got it. Here it is. Let me see if I can get on the screen. There we go. So this document is the actual application. It is 3245-0407 SBA Form 3508 PPP forgiveness application. It is on the website for the SBA. It's this document, not the rest. The rest are just documents I have open. So it has an expiration date. That's the one I already told you, 6 months out. Has instructions on the form, all these definitions. The only one they don't define in here is a full-time equivalency, which was kind of frustrating. The alternative covered period is here. If you get, this is the one that I'm trying to warn everybody about. Click the box. If you got more than $2 million, they're not going to look at the rest of it because they don't care. They're going to audit the heck out of you. Once you click that box, that's the red flag that says we're coming. So then these are all the forms you have to do, entering the total payroll, the amount of business, the amount of rent, utility payments. Then this is where it gets into the confusing parts about the PPP Schedule A. I thought maybe that was from the application because you did have a Schedule A for some of you on your actual application for the loan. It's not. It's on this Schedule A, and basically it is there's a lot of calculations. I'll scroll all the way through. Here are the costs that are eligible. This is the section that talks about the eligible payroll costs. They include, where is it? Did they go through it? I'm sorry, it's not in there. There's another section down below. Oh, here's the certification that you have to do. The dollar amount for which forgiveness is requested, quote, was used to pay costs that are eligible for forgiveness, payroll costs to retain employees, business mortgage, and so on. Does not include non-payroll costs in excess of 25%, all the different things. 8 weeks worth of 2019 compensation for any owner employee. And this, I wanted to read this to you. I don't have it on slides, so I wanted to point out to you. This section here is what everybody should be very concerned with. Why? Because if you're facing an imprisonment of not more than 5 years and or a fine of up to $250, and then if you did this through a federally insured institution, which 95% of you did, it is a 30-year and a $1 million fine. And they are not playing games with it. So when I say that you should be careful, and that's what I was trying to point out to the company I talked to this weekend, if you're paying people to just stay home and you have no legitimate reason for the loan, you should just give them the loan back and taking advantage of the other things that are there for the free money in other areas that we've talked about in the last few weeks. So those are the concerns I have. Let me see where I can find that definition because it is in here. Here's your total weekly full-time equivalency. This is the only time FTE is defined right here. They don't tell us at all what they truly mean by it. And then I'll show you the worksheet that is an absolute nightmare. Here's your Schedule A. All of the things you have to do. Full-time equivalency reduction calculation. The good news is if you didn't reduce, you can skip it. If you did reduce and you're inside, and I'll show you that on the worksheet, you reduced wages by less than 75 or less than 25%, then you're off the hook. So that's good. So here it is. Nope, that's not it either. That's cash compensation. Sorry. I usually try to have things a little better than this, but it's really hard when it's a brand new document. Here's where you have to determine whether the pay has been reduced by more than 25% and run those calculations. If it's not, you don't have to do the rest. If you're looking for safe harbor and it's below 75%, then you go through all of these other things, including the return to work by June 30th. There's all kinds of calculations in there, and how those are going to shake out, there's still some questions on that. So I'll have to get you that information about the healthcare. I think that was in last week's announcements or one of the frequently asked questions. I don't think it's in here. This is a worksheet that has it's very bizarre, but you are required to turn this in. Every single employee, obviously, if you have more than 7 employees, it's not going to fit on here. Cash compensation, then they say average FTE. I have no clue what they want on average full-time equivalency on that. I don't know what that average is. I don't know what they're asking for, and they have no definition on here or explanation of what they want. But then they're looking at the wages, and then you take this box and you move it on to the other percentage box. Then they have the safe harbor explanations down here as well. And they talk about 2 different time periods to look at, one of them from 2019, February 15th to June 30th of 2019, or January 1st to March 31st of 2020. I'm looking to see if it's in the end here, to see if I missed anything. Oh, wait. No, sorry, I have to get you that. I thought it was in this document. It doesn't appear to be here. This last one you don't have to do. It's just demographic. So any other questions? You want me to move on?
We've only got one more, and it's probably pretty simple. My spouse owns a retail store. Can they hire me and put me on the payroll to count toward loan forgiveness?
Yes and no. So I've been dealing with that all weekend as well. So one of the things you have to do is a bona fide offer of employment, and that is covered in here as to what precisely, and I don't remember where. I'm gonna reduce that down so we can get back to the slides. Sorry, it's the next one. So one of the things is that you have to show the full-time equivalent employees, the ones you had last year, and list what their salaries are now, which means if you don't have a reason for letting them go, you're going to get scrutinized. If you had somebody that was making $30 an hour and now all of a sudden you have somebody making $8 an hour, that's not a full-time equivalent. That may be in the number of hours, but it's not in the number of or the amount of wages. So we've dealt with that. So what we did was we did a DocuSign document, offer of employment, starting on day 1 or week 1. We decided to do surely to goodness they're going to come out with the next week. We don't have to start paying on a Friday night. So we did week 1. We're bringing everybody back to work, and this is what we're going to require. And if you're going to do work from home, we built a work from home strategy that included if people weren't able to normally do their job, okay, we're going to do continuing education training. So we're going to track you on a daily basis. You're going to identify an educational plan. We're going to pay you to get your education until you can go back to the factory floor or whatever it is. So we did that. We had them DocuSign that they understood that they would be tracked. And I didn't care if you use your phone, your neighbor's phone, your computer, whatever will help you get internet, whatever we need to do. But we're not going to pay you for free to sit at home. So we did that, and we paid people to do the work from home strategy. If you didn't DocuSign and you didn't return, then you were deemed job abandonment, and we didn't terminate you, but that has an impact on your wages. I'm sorry, your unemployment. There are 3 things that they required in a frequently asked question that came out last week if you're going to have a bona fide offer. 1, written letter to your employees offering them a position. We used electronic, written, and email because we had established email communications with all of our employees. Number 2, telling them what would be anticipated and expected of them. Number 3, requiring them to return. A written acceptance or rejection or ignoring it is a rejection of your offer. Number 4, notification to them under the state specific. We didn't research each state, but we just said your state laws may preclude you from obtaining unemployment benefits to the extent that you reject this bona fide offer of employment. We did not have a very good response, meaning a lot of people didn't come back. So then, and I know this is a long-winded explanation, but you need to understand this for hiring your spouse or anybody else. Then they were allowed to hire anybody they wanted at whatever rate they wanted to get whatever going as possible, because you have had 50% of your people reject your offer. You're sitting on a pile of cash and you need to find a way to get people back to work. So at that point in time, if you've offered it to someone and they've rejected it, you can hire anybody you want to get them in. Now you're only going to get forgiveness to the amount that is 75% payroll, so you can't like make it up. But hypothetically, in that situation, if you had a store manager in retail and the store manager didn't come back, you can hire that spouse into that position. Also, if you go beyond the number, so if you had 100% before and now you got 125%, you had 5 employees before, now you have 6, you're fine. You can pay that person out of that same pool of money. As long as you're not cutting somebody out without a bona fide offer. The only reason, and you could do that, that's, you know, you could fire one person and hire a different person, but now you're into potential discrimination, potential changing. Why are you doing this? Is it a different pay rate? All of the scrutiny you're going to get from your lender. So the way that I painted it originally with a bona fide offer, rejection, and hiring someone else is the ironclad way to make sure that you don't get scrutinized, because now you have a letter that says, here was the DocuSign, nobody returned, and that's why we did it that way. You could do that. You could hire your spouse. There's no preclusion of anybody working. However, keep in mind the comment I made about the owner bonuses, owner pay, that you could get, I'm not saying you were going to do this, but let's say you're going above 100,000 or at 100,000, you could get scrutinized because even though that person's not an owner, they're a spouse of an owner. So I don't know how that's going to be interpreted. If they weren't there before, it could possibly, hypothetically, look like you're trying to take a bonus beyond the 100,000 for the owner by paying a spouse. The other thing is, let's just get real with this. You got $749 billion being spent. You've got lenders that are drowning. They only got a 5% or a 3% commission. And now they're going to have to do audits on all this. The chances of a small retail shop getting audited, it's not going to happen. I give you guys the straight legal. If I were giving you guidance, I would then turn around and tell you, now let's talk real about risk management, HR, and where the balance is between legal, accounting, tax, and whether you're going to get hit. My job is to give you the legal in this and then to tell you if you want to do something different, I can find a way around it, but you're going to have to go against, you can find a way around it. You're going to have to go against some accounting guidance, some tax guidance, some legal, some risk management. It's always a weighing in the business. You know that. Ready to go on?
Yes, sir.
All right. I knew this was going to take a while, so the fact that we're into it this far, the first part was the longest with the PPP because of how much is going on. But here we are with the Kentucky reopening, so I wanted to give you this. I know it's a little small, but I wanted to get most of it on the screen. There are 2 things that aren't on here. One, there are some things into June that are not on here. And 2, the churches I cut out because we talked about it last week, so I didn't want to, it was May the 9th, it was identical to May the 11th, and it was because the governor got flipped by a federal judge saying that he couldn't treat churches differently and have them open on May 22nd from other retail. Honest to goodness, I think that with the exception potentially of restaurants, because of the different nature of a restaurant serving people, I'm not sure any of this passes constitutional muster. I'm just going to be blunt as an attorney that has handled a lot of constitutional in the past. I look at this and I'm not sure you can treat a different named business from other businesses. So if you're, hypothetically, if you run a hair salon and you also have a food and beverage in the same, and you have a coffee shop hair salon, do you get to open? Do you have to cut out the hair salon? What's the difference? You're serving people. You can have dog grooming on, what was the date of a dog groomer? Oh, May 11th, dog grooming. But you can't cut people's hair. You can have horse racing with no fans on May 11th, but you can't have dirt track until was June 1st, I think. Yeah. So I think that you're going to get some challenges to this. There are already some challenges, but this is the ordered phases. I do disagree with some of these. I just think that you can't treat them that way. But the ones that are blue, those are ones where you can click on the guidance on the kycovid19.gov/COVID-19, I think. You can get to those, and they have additional guidance. On any that are blue, you must comply with what I'm about to talk about and whatever additional guidance is there. So if you run horse racing, you must comply with all guidance that's under the horse racing tab, plus what we're getting ready to talk about. If you're in construction, same thing. You must click on the construction. I didn't include them all because that would be 150 additional slides, because these things are very long in terms of what they require you to do. But these are the guidance points, and those are the dates of opening. There are some additional, like I said, youth sports starts on June 15th. My question, I have a personal question on this. I have a son playing college baseball. So the question I had was, is that a youth sport, or does that start with the June 1st? Because he's in they're trying to get all the college baseball players to at least be doing something this summer. So they're starting on June 1st with the dirt track, weightlifting, and so on, because that's what they're doing. But then they have June 15th for outdoor sports with youth. I don't know what a youth is. I'm assuming under 18, but those are some of the things that are not defined well under the policy. So I'm not going to spend any more time on this. I do think if you run one of these that's being treated on a June 1st, I think you've got some challenges to it, because once you open one outside of restaurants, once you open one type of business that's retail, it's really impossible to start suggesting that retail can have things open on May 20th, but everybody else has to wait until June 1st or later. I think that's a little, and I also don't understand why restaurants are on the 22nd instead of the 20th. And some of these are getting absolutely destroyed because they're going to miss Memorial Day, the ones on June 1st. And stay tuned. You're going to see it. It'll be in Kentucky.com. It'll be in the Courier Journal. It'll be on the news. You're going to have all kinds of these people filing, if they haven't already, lawsuits, class actions, and things like that, because it is treating different entities differently without adequate description as to why they're being treated differently, which is unconstitutional by definition. So that's my little comment. All right. So here's a letter that was written. I screenshotted it so you knew it came directly out of a letter, not from me. This is on the May 11th letter signed by a person that was acting, that crossed out acting and said, I am the governor's representative. All entities, and I've gotten questions about this all week long for 2 weeks straight. When the governor was on, we got the question, yes. If you are already open as a exempted organization, you are now required to comply with all of the new requirements, including your industry specific as well as the overall. It literally says these are and I want to point this out too. I don't have my highlighter today because of the way my computer's acting. Yeah, there we go. 1 second. Minimum requirements for all entities can be found here. Well, that's what we're getting ready to cover. In addition to this, entities shall implement and comply with all industry specific. That's what we just talked about. Those are going to be published and turn blue as you get closer to the date you're opening. If you cannot open, you must not open. I'm sorry, if you cannot comply, you must not open. You're not allowed to open if you can't do all of the industry or sector specific and all of these others. So if you are already open, you have to do this. If you haven't been open and you can't do this, you can't open. All right, here we go. These are the 14 things. A couple of these are duplicative. Sanitation and sanitizer and hand washing seem the same. It's clean, but they're here. Continue telework for all employees to the extent possible. Phased return to work, different shifts, different locations, and you must enforce social distance. This means you can and must discipline if it's not being followed, because you are under a state directive from a governor to do so. Limit face-to-face meetings, use Zoom. Again, if you were with us in week 3 or 4, I talked about how ironic it was because Attorney General Beshear said Zoom meetings are illegal under state law, and Governor Beshear has mandated Zoom meetings for all state business. The new Attorney General hasn't set that aside or otherwise done anything related to that, so I'm not sure what we'll do with that. I'm pretty sure that the new Attorney General is not going to go against the governor during an emergency on the Zoom meeting issue. It's just ironic to see this as part of the directive. Universal masks and PPE are required. Again, universal masks are required. I meant to include that as a breakout. You'll see down here, I've got a couple of these. Questions have been asked about universal mask. I'll see if I can drag it up on the screen because I didn't include a slide on it. If you're in your own cubicle, you don't have to use it. If you're in a common area, if you're in a meeting, if you're with anyone, all employees must use a mask at all times, period. No exception. You've asked me every which way to Sunday, is there any way we could do it? But what about this? Well, hey, hold on. How about if we do? No. If it's a governor mandate, it's a governor mandate, and I can't give suggestions for how do I get around it at work. Do we really have to wear it? Is this something I can, so-and-so has asthma. You have to have an asthma exception mask. You still have to have it. They sell them that are just the plexiglass mask without the other. You have to come up with something for your asthma people, for people who can't use it. But the mandate right now is if you're going to open, you must have masks unless you are in a separate closed room by yourself. And it's got a big long description of masks. So I'm not trying to, please don't say, well, you said that that's all. It's in there, but it's pretty darn expansive on everyone, including encouraging customers, and you can refuse customers access if they refuse. Restrict common areas. I heard hand sanitizer, hand washing, encourage frequent hand washing. That goes without saying. OSHA already had that out 10 years ago. So those are all out there. Restrict common areas. Last week, I think the doctor said, hey, refrigerators, you can still use them. Just, don't touch other people's foods. I've heard the opposite from actually the CDC has recommended heavily, as well as the COVID-19 task force, to literally not have food at work, not allow food at work, or require people to keep it in a refrigerated little cooler by their desk, because one of the biggest problems you have is refrigerators are cool by nature. COVID-19 and all diseases like cool, dark places. When you close a door on a refrigerator, guess what it is? Cold and dark. I wouldn't recommend using them right now, or you need to have them cleaned out, sprayed, sanitized all the time, just like all other common areas. It's just dangerous. Somebody coughs in the door, closes it, now it's inside the refrigerator. What good was a mask if your food's getting coughed on? That's just personal comment. So daily temperatures and health checks we're going to cover here in just a second. Create a testing plan we're going to cover in just a second. Those are two scary things for me and HR in general. You need to make special accommodations where possible, and that includes allowing telework for workers that are at risk and coming up with other things that they can do, protected areas and so on. Designating a healthy at work officer. Whoops, didn't include the quote on there. Sorry, that's a typo. That's one we're going to cover here in a minute. Educate and train your employees, and you have to have contact notification responsibilities. That goes back to week 1 of our sessions. If you weren't on, I talked about a crisis management plan, and I said you needed at that time, if you ever intended to open, and that was actually before you actually were forced to close, that you have a crisis management plan with all of your contact directives, state people on speed dial, knowing who to contact, governor's office. Now, of course, it's not, but back then I gave the example of when I was in direct contact with the governor in Georgia due to a crisis going on when this was all still brand new. You need to have those chains in place. So most questions deal with those two issues. the who, what, and how of a healthy at work officer and conducting daily temperatures, health checks, and what the heck is a health check? Well, here's the guidance. Healthy at work, not much guidance. Nothing has come out since we talked last Monday. I had this on the screen last Monday. And you know, we've had some back and forth, and I'm going to talk to you a little bit about it right now. On the healthy at work, last week I raised some real serious legal issues that I have. There are a lot of times that I go through risk management with Lyle and other people, HR people especially, and then if you have a risk manager, I deal with your risk manager, and we talk about it. So here's what the law says, whatever it is, whatever the issue is. And I'm going to go off topic, but give you a very quick HR-related shocking thing, which most of you know. EEOC bars discrimination against criminals. I was asked by somebody, I need to write a policy about hiring, and we're concerned about criminals. I gave them the legal guidance. Well, all right. We have to be very careful about discriminating against criminals. So if it relates to financial crimes and this is somebody in a financial position, yep, we have a legitimate business need and we can stop that. If it doesn't, then we've got a problem. If the person was convicted of a sex crime, I can come up with a legitimate business need not to have them around because of sexual harassment, so on. Then I ended with the risk management. I said, but please send me a criminal EEOC that I can defend and stand in front of a jury of 12 people and explain why it is we didn't want a criminal working for us, and see if the EEOC comes after us, because I would love to fight that fight. I can give you legal guidance. Sometimes you're frozen by the inertia of that legal guidance, accounting guidance, tax guidance. I get that. In these discussions, I give the legal, Lyle gives the HR, each one of you that are in HR, you give the HR. If you're in risk management, you do the risk management. You bounce the ideas off of the accountant, the CFO, the attorney, and HR, and we come up with a combined decision. So the healthy at work officer, in my humble opinion, is not something that is an HR only. And I got some comments this week about the fact that, you know, well, if we all followed all of the legal guidance all the time, we'd be in some real trouble. I agree. And I always give the risk management and the HR perspective in addition to the legal when I'm giving guidance to my clients. On this, I'm asked to give the legal, so I'm giving the legal. However, healthy at work officer, in a mandate from a governor that thou shalt not open your business unless you do these 14 things that we had here, and one of those is a healthy at work officer. If you don't have an officer in place and that person is not trained properly, you're in violation of a governor's order. If something happens to a customer or to an employee, that's a liability issue. I find that to be something very frightening. I don't know a way to fudge on the legal and just go with HR on this, because it says officer, and officer by definition is a representative of the company itself. My concern with the healthy at work officer without a definition is you're putting your company at risk unless you have adequate training. And yet the mandate says, quote, you're responsible, well, it's not quote, but it's very close. You're responsible for the business's compliance with all governmental mandates that now exist or are issued in the future. Now, I don't know which person that is, but my concern is we're combining two people into one job. HR can handle the governmental mandates easily. We do it all the time. But is that person adequately trained to be in front of somebody taking their temperature? Are you willing to expose, hypothetically, your 70-year-old VP of HR to the COVID-19 because now they have to do the temperature checks because they're responsible for verification that people are still healthy at work? I'm concerned about it because I believe that they went too far, and they should have given us more guidance as to what they anticipate the officer that is the healthy at work officer. What do you want them to do? Do you want them to hire somebody else to do these things, or tell LabCorp to do the testing and then they're done? Or do you literally want this person solely responsible? Can they assign the responsibility? But you as a business, you're going to be liable for that. So I'm very concerned that this is a little bit less than what we needed. There is no other guidance in the current directives from the COVID-19, KY COVID-19 that's up there. I think they're being unfair to the HR people because I think this is going to fall on HR. And I'm a little concerned about you all doing it without further guidance from the government. And on the back end, I'm concerned about what if somebody gets sick and dies, and now they can challenge whether your HR person knew what they were doing, whether it was the right guidance. Did you know all the CDC? Were you up to date? What about the publication that came out yesterday from OSHA? And you'll see that on a few slides. Every single day, there's new guidance. Is this person responsible for that guidance up to the present? If so, is it a full-time job? That's a frightening position. I stand by my position that this is a very concerning thing. I think some of the HR people on the phone can handle it, but I think you need to be careful with who you designate into that position, and you need to structure that job function very carefully. It is a mandatory position, so you better have somebody who was identified before you opened your retail establishment, your restaurant, whoever. And by the way, the next question is that required 24 hours? So if you have 3 shifts, do you need one on each shift? I think you do, because it literally talks about the need for the person to make sure that if somebody falls sick during the day, they come back from lunch and now they have a temperature, they have to know what to do, who to contact, what to do in terms of local authorities sending them for testing and so on. So I think you need one for each shift, not that somebody just has one that's not on site. My opinion. All right, next one. You must assure daily temperature and health checks. They can be self-administered, or the employer has to do it before they walk into the workplace. I believe for liability purposes, if you're going to do the self-administered, you probably ought to do the health at the workplace as well, because if you only rely on your employee, what if they don't know what they're doing? What if it's not uniform? What if you're using different thermometers? What if they lie because they really need the job and they don't want to be at home for 14 days? What if they're lying and they're staying at home, but they're not really sick? There's all kinds of concerns there. I think the workplace entry screening is your best. There are some that I think Lyle's aware of that make it a little bit easier, heat sensing and so on. I think they even have them on your phones now that you may be able to talk about. You're required under this to direct all employees with a fever or any symptoms of COVID-19 to a primary care physician, primary care practitioner for testing. You must assure, and I don't know how you're supposed to do this, but you must assure that anyone with symptoms are indeed tested within 36 hours of you figuring out that they have that symptom. Once they leave, I don't know what you can do, but don't drag them to the testing center. I think you'd get in trouble for that. You must train all employees on how to isolate individuals with suspected COVID-19. That one scared me a little bit. Again, this is the legal instead of HR, but I look at that and I go back to the old shoplifting. If you ever shoplifted at Kmart, no, I'm not talking from personal experience as far as you know, but if you ever shoplifted at Kmart or Walmart, they used to lock you in a room. Now, basically, everybody says, look, no employees stop anybody from leaving, and we don't care whether they're stealing. And the reason for that is I was going to pay for it. You tackled me before I could pay for it. And by the way, now I broke my arm and now you're responsible. That's an assault, all those different issues. So now most businesses are like, unless you are our security person, you don't touch a customer. I'm a little concerned. It doesn't say employees. It literally says train employees. It doesn't say employees on this next part. To isolate individuals with suspected 19. I wouldn't isolate a customer at all. I would ask them to leave. And I'm not sure whether I would instruct an employee on isolating physically a coworker. I would ask the coworker to leave immediately, wipe down anything they touched, have them go to their PCP. I would not isolate, lock, close the door, keep them in a room, because then you're going to get sued for imprisonment, kidnapping, and other things. So be mindful of that. I thought it was a little bit weird that said to train them how to isolate. I would train them what to do, not isolate. Send them away, send them home, send them to the PCP. Don't lock them in a room. And then it requires you to have a plan in place for reporting. Again, we talked about, we did that in week 1. Go back and look at it. There was a whole chain of what to do. So I know there's all kinds of questions on that, and I left it that way because I'm assuming we're going to need to answer all kinds of questions on that. So have at it. What do we have?
All right. So the first one is someone remembered reading some guidance when it comes to doing the health screenings, where you ask if they've had anything within the last 2 weeks, if they've been in contact with anyone in the last 2 weeks. 2 weeks was kind of that little threshold. Is that still the case?
Yeah, I mean, the 2 weeks is what they seem to be suggesting. I'm trying to pull up the guidance so you can see it. Give me just a second. That's not it. Like I said, a little glitchy going on here. So let me pull it back over here and see if I can find it. Here we go. No. Oh, I will say this. We didn't waste our time on it, but Kentucky unemployment is broken. It's still broken. They did update. If you have any employees that need to have their biweekly updates, they have brand new series of questions on there for COVID-19 that are required under the Department of Labor required, and we're actually going to cover that here in just a minute, a little bit on the next updates. They required states to come up with screening and appropriate questions to make sure that they're doing their jobs. So there's about 15 COVID-related questions on the initial page for employees before they can get to submitting. The problem is that you can't get in to submit, including like the same server error we've talked about for 9 weeks is still there. Please try back. Our server is busy. When you get in, those employees that were blocked out before, it's been reported to me all weekend that they can now get in, but their questions are a little bizarre to start. And then some of them are still getting the PECU, the Pandemic Employment Compensation Act, instead of their regular pay. I've told everybody just submit it. The other thing is Workshare, still broken. The last update I got was Friday. Someone advised me that they're waiting on the Department of Labor to rule on whether they will agree to Kentucky's plan. And I wrote back to this individual who's a spokesperson for the state, and I said, well, unfortunately, you didn't give the same leeway to the employers. So here's what I'm doing, and each of you should be doing this if you're thinking about Workshare. And I apologize, I'm off topic, but this is extraordinarily critical. And I may have covered it later. If I do, then we'll skip that slide. But I need you to understand this. If you are doing Workshare, what I've been doing for clients is I sent the email letter, PDF, signed by me on behalf of my client. Here's our Workshare plan, and I literally answered every single question that is in the Kentucky Administrative Regulation for Kentucky Short-Time Compensation or Kentucky Workshare. I sent it to the Executive Director, the Secretary, the Deputy Secretary, the Attorney, and I can't remember who else. I literally copied everybody and their brother on it and said, since you don't have an application online, here's our application. This is what we have implemented. Because KAR says they shall issue an application, and they shall do it immediately. They're now 18 days today into it because it was file stamped KAR, Kentucky Administrative Regulation. I think it's 787 KAR 1:350E. We talked about it last week and the week before. It is the law. There is no Workshare application. So I think I'm the only one that's doing it, but I'm submitting my applications in letter form saying, hey, since you haven't done your job on an application, here's what I've done for my client. They are reduced 10%. They are reduced 50%. They are reduced 40%. Here are the names of the employees. Here is what we're doing. Here was the method of contact. Literally 23 questions that they were supposed to put in an application format. I put it in on my letterhead on behalf of a client and said, I represent the client. These are confirmed under penalty of perjury. Here's all the answers from the client. They're doing it. And we triggered that starting last Monday and the week before, May the 4th, for, I think I'm up to, well, I'm over half a dozen people that I've done that for. I would not encourage you to wait because, as I said on the week 6 or week 7 Workshare, there's only $1.3 million set aside for Kentucky. I want to make sure my clients got mine, or got theirs. So I rushed out and I did it. I did get a confirmation. They're aware of our applications and they're awaiting DOL. And I wrote back and I said, I really don't care whether you're awaiting DOL, because the regulation says if DOL doesn't accept it, then the employer pays 1/2 of the amount of the reduction. We are going to pay 1/2 of the amount of the reduction, and we are in compliance with the Kentucky administrative regulations. We look forward to you approving ours within 15 days of the application being delivered to you. So don't wait. Find somebody to do it for you or do it yourself. But if you wait, you'll be one of the ones sitting there going, what do you mean they ran out of money? Because I'm doing it for everybody I can possibly do it for that asks me to do it, because it's foolhardy to wait for them to do their job. Because you look at the Kentucky Unemployment Insurance Commission's website, it's been broken for 9 weeks. So if you wait for it, it'll never be up there. They still haven't published the KAR. So I'm sorry I'm off task, but that's something you needed to know. Here is the website from the governor on the questions you had. This is his website and what he's done and when they're opening things. Here's the COVID-19 website. Here is the Healthy at Work. Sorry. My screen that's on supposed to be on the right is on the left, so I'm having to do things like I'm in a mirror. It's really fun. Here is the Healthy at Work. Here are the places, the place where you get the actual minimum requirements are in this order, and the attachment. The attachment that talks about the testing is right here, starting at the top. Sorry, I'll move up a little. Conduct daily temperature and health checks. I get my cursor to get out of the way. Entities must require employees to undergo daily temperature and health checks. These checks may be either self-administered or administered by the entities prior to workplace entry. Self-administered temperature and health checks may be performed at home. Employees who have a fever and/or any symptoms should be directed to their PCP. This includes employees who passed and then became sick at work. This is the testing plan, the one that was just asked. You must ensure that any employee with COVID-19 symptoms is tested by a healthcare provider within 36 hours. So that is your testing plan directive. It has nothing to do with your actual check during the day. But I wanted to walk you through that because there is no guidance on specifically what questions should be asked. The health requirements and temperature section below, this is where it talks about the health screenings. You must assess each employee each day to ensure that they do not have any. And then it talks about some of the things that you can and can't ask, but it's not limited. Now, what I would recommend that you do is literally pull up the CDC directives, because like that we talked about for a few weeks, the sense of taste, sense of smell, the dry cough, other symptomology things. I literally would pull up the CDC guidance and go with their direction on what to ask and what not to ask. Why? Because if you go over bounds at all and you ask a question you weren't supposed to ask, you may get an answer you didn't want to get. And if you get that and you're in a wrong position, you could end up on the wrong side of a lawsuit. I think I gave that like a supervisor. So you're healthy at work person, if they're a supervisor, and now you ask an employee a question and the employee says, no, I don't have that, I have cancer. Well, now your supervisor knows that you have cancer and may use that against an employee in making decisions. So what I have asked, or what I have recommended to my people that I'm giving guidance to, is to pull up the then current CDC, pull it up every Friday or every Monday, make sure your questions are the same as the symptoms that are on there, keep it to yes or no, so that you keep it as short as possible. And these are the screenings that they recommend. So if you go down through, my only concern with this one is it's not comprehensive, and this is frozen in time as of May 11th. If the CDC comes out with a new question they suggest on May the 18th, I'd go with the CDC, because this is not a living, breathing document. It's not being changed and updated. That's not a criticism. It's just that it existed as of May 11th. You should be asking current questions based upon current guidance from the CDC or whatever other guidance is out there from the COVID-19 team. But these are the three areas that they suggest for in-person assessment. So if you see any additional on the CDC, I would throw those in. Questions about where they've been and so on, but then they don't go further beyond that. Here's the temperature screenings. If you do the on-site, here's the guidance. If you do the self-screening, honestly, they really have not done what the governor told us, Lyle, I think it was 3 weeks ago. He said that if you did work or testing at home, it was going to be limited. He was going to have a specific chart. It better not be the same every day. You better have adequate reporting. I don't believe that we've gotten any further guidance on the at-home testing. Again, but it literally says here, if they say no to all the questions and their temperature is below 100.4, they can work. If they say yes or their temperature, they can't work. That's kind of the gist of it. And then they can be sent for follow-up to the PCP within the 36 hours, which was on the page before. So that's the guidance that's on there. The contact notification we talked about a little bit. I'll close this out, go back to it, and I'll answer the next question.
Wonderful. Okay, with more and more states opening up to travel, should employers still require employees to quarantine for 14 days when they return? And can they create kind of guardrails around air travel or requiring testing before returning to work?
Yeah, that the governor got shot down on that. We talked about that a little bit last week, but if you recall, the governor had a policy in place that he got shot down on, which basically said if you go across state lines, when you come back, you're required to be quarantined. And they shot that down and went with a lot less stringent that if you have symptomology and so on. Keep in mind that you can ask whether somebody's been exposed and so on, but I think you need to, this gets back to that CDC guidance. You need to ask the questions that CDC has said you can ask. Why? And the EEOC we covered in week 4 or week 5 as well. You can ask certain questions, but you cannot dictate what an employee does on their personal time. First, you're not allowed to, under both NLRB, EEOC, you're not allowed to control an employee. The other thing is that you could, hypothetically, this is a hyper-legal argument, but you could end up with a Fair Labor Standards Act claim because you're trying to dictate everything they do on their personal time. I did have a case like that where ambulance employees, EMTs, were being required to stay at the firehouse 24/7 but not being paid. And then they were allowed to go home, but they had to call within to try to fix it. They said, you can go home, but you have to answer the call within 10 minutes. Well, you're still then bound. You still have to pay that person. You can't tell them that they can't go to the movies, they can't go more than 10 minutes away from the station house and so on. So if you're dictating what everybody does on their personal time, you may well end up with some attorney, I don't know how far they'll get, challenging you because you're actually governing off-hour activity. You do have the ability to protect your employees and to ask questions about whether they've exposed. But you can't go so far as to force a 2-week quarantine because they went to see their aunt in Cincinnati and they sat across a social distance table, and because they went across state lines, they now can't work. That's not, I would highly recommend that employers not do that based upon the ruling that the governor got from the state trying to do the same thing. He got sued for stopping people from coming back across the border from Tennessee or from Indiana when they had voluntarily gone for non-medical purposes. You can't do that.
Okay, and we've got a question about an employer who's trying to coach their employees about privacy issues. So as an example, an employee left sick and went to get tested, but before the employer was even aware that she had left, she had apparently been talking to other employees who then started calling to ask questions and complain and see if she was coming to their site, or people who've been to that site were going to come to their site. So do you hear of employees discussing their COVID situations, and how do we have any recourse?
Do you have a recourse because they went and told people I might be sick?
Basically, it sounds, at least the way I'm interpreting this, is it sounds like they're creating panic where there may not be any need for panic.
I laugh because that was our week 1 on steroids, where we talked about the hoax of somebody who called in and said, I have it, so I can't report for my factory job. Actually, my mom has it, so my mom can't report for her factory job, and created a actual real crisis across the entire state because of how massive this was going to be. So yeah, it's a real thing. In that hoax situation, yes, I would think a hoax would be, if it was an intentional, then disciplinary action needs to be taken because you're basically inciting a riot, inciting panic, and so on. And there are some criminal aspects to that. But if an employee, let's say that Allison, that you went to a meeting with me and everybody else on here, me, Autumn, Lyle, and Chase, and we're all sitting around, and then you started to get a fever, and you came back to us and said, hey, FYI, I've got a temperature of 100.5 and I'm on my way to the clinic. I just want to let you know. That's actually part of that contact responsibility. Now, should that employee be doing it? I think that employee should be told to leave immediately. And if they don't leave immediately, they may be disciplined. But part of the report, if they text a coworker and say, I've got a fever and I was in the break room with you this morning, or I was in that face-to-face meeting, I don't think that you can discipline somebody for doing what it is that's supposed to be done unless you told them straight up front, look, we are immediately contacting all of these people, but we want to tell them precisely what they're supposed to do, not panic the whole workforce. If they incite a panic after you alerted them not to do it, then you know that you've got other opportunities. Unless you are sitting on your hands not telling the rest of employees, then you've got a problem on your hands. But in a general sense of an employee saying to somebody, look, I might have COVID-19 and we were together this morning, I don't know that I would discipline. If, on the other hand, all they're doing is spreading a rumor because, hey, they sent me home to be tested, I might have it, use your discretion. If they're doing it to be stupid, caution them. I'm not sure how much further I would get, and the reason for that, this is maybe the hyper-legal side of me. I don't want to get into an FMLA or an ADA. I don't think that this qualifies as ADA unless they need a respirator, they need the other things. But honestly, there's going to be some litigation about retaliation out of this. I had COVID-19 and my employer fired me. My employer disciplined me. I was just trying to protect my coworkers and I got written up. There's also going to be bad press for you if you punish that person. So if they're inciting a riot, yes. If they're alerting people, what I would do is caution your employees. Look, there's a right way to do this. We go through HR. HR is there for a reason. HR knows what the steps are and who we're supposed to report to, how to alert people, and how to do it in a way that's not going to panic everybody and their brother. If you do it that way, that's fine. Just be mindful, if you start disciplining that person, they're going to run with that piece of paper and say, look at what happened when I tried to warn everybody that I had COVID. So be careful about it.
Okay, to add to that, we got to follow up. What about the other employees discussing that health information if it's unrelated to the contact tracing process?
Yeah, any employee that receives information about an employee having potential COVID-19 should be very mindful of the HIPAA requirements. We can't be talking about people's potential medical information, even whether somebody has the flu. So you tell those who are immediately affected that they might have the flu so they can wipe down their workstation. But the reason why that person's off of work, I tell all my people, we don't go into detail about anybody who's leaving work. So if an employee finds out about another employee, they are required to maintain confidentiality and HIPAA privacy. We don't talk about anybody's disabilities or anything else. So we obviously don't talk about anybody's positive or potentially positive situation there. So yeah, I think you could discipline an employee who's just out there talking about, wow, did you hear that Jane got sent home for testing? They all think she's got it, and that incites a riot. That's different, because that employee really, if all they're doing is spreading a rumor, they're engaging in fear mongering that could cause problems for everybody, and that's not acceptable. That's the same problem that we have with any discussion about confidential private information. So yeah, that person, if they're part of the chain that's supposed to alert people, they should be doing it correctly. If all they're doing is rumor spreading, then that should be alerted ahead of time as part of your policies you put together, that look, if somebody is a suspected positive or even a real positive, that's not information to be just out there talked about. The people who have potentially had exposure will be alerted. Everyone else will be told there was, suspected positive on the first floor of factory level A, and we took all appropriate measures. Please make sure to verify for yourself. Those that were somewhere within contact have been alerted. They're all put on quarantine. We will keep you informed. That's how you handle it. It shouldn't be that John Smith in factory level A tested positive and we've removed him from the facility.
Okay. And so if an employee answers yes to experiencing symptoms but they don't have a fever, they still need to be referred to be tested, correct?
Yes. And is that unfortunate? Possibly, because I could see people who are like, oh my gosh, I don't want to go to work today. Hey, I know how to get out of it. If that person keeps answering yes and has been cleared by a primary care physician, then you've got documentation basically that the person doesn't have COVID, doesn't have anything that's communicatable, whatever. Sorry, communicable. But they are not coming into work, so then you take action because they're just not wanting to work. But the answer to the question is yes. If you look at his mandatory guidance on there, it's on the other screen I took down. If you look at it, if they answer yes to any of those questions, you send them to their primary care physician within 36 hours. What's not covered in there, and quite frankly, at some point, kind of like we talked about with risk management and legal advice, governor can't include every single thing in the guidance. So what happens if you send them, they go, PCP says they're fine. Well, then they come back to work and they answer the same questions. I don't think you send them back to the PCP. I think you tell them, you know what, as long as you are cleared by your primary care physician with a letter that says that you can come back to work, you can come back to work. If you don't have the letter, you can't come back to work. And that's the gist of it. The other follow-up thing that I don't know the answer to yet, it's still being, well, it's not even out there yet. What happens if somebody is referred to a PCP and they come back with a letter? How long is that letter effective? Is that letter effective for the next 14 days? Is it effective for the next 7 days? Is it effective until one of the questions is answered differently on the form? Is it effective? What if they keep having a temperature of 100.4? Do we have to test that person every day, every week, every 2 weeks? How long? I don't know the answer to how long because this is an ongoing virus that can be picked up every day. We don't know the answer yet to how long is a return to work doctor's note a viable return to work doctor's note. Common sense right now is the answer. Human Resources needs to take the position that, you know what, we're going to allow that return to work. We're going to test, and if there's any substantive change in temperature or any of the answers, then we will force that person back. And you're going to have just some kind of directive on that. It's only viable for a week, and they have to go back the next week or 2 weeks. But in between, any of those changes to questions changes how much we do. You want me to go on to the next slide, or do you want to cover more questions?
And we can go to the next slide to give people some time if they have any other questions. Then we can.
All right. So there is some ongoing guidance. This is the last main slide. There is some ongoing guidance from governmental agencies. The Department of Labor is the one that's collaborated most of this. We talked about the short-time compensation guidance last week. It was issued Monday morning at 9 o'clock. That's where Kentucky has indicated that they're not doing anything with their policy on Workshare until they get that guidance. I think that's inappropriate, so don't sit back. They also issued on May 11th caution to states to scrutinize unemployment insurance claims for fraud, and they warned the states, this is kind of interesting, we've got $26 billion set aside for audits, investigations, and oversight activities related to state compliance with unemployment insurance laws and the CARES Act. So they literally told the states, the Inspector General is going to come after anything that they see, so you better be asking the right questions. I believe that that's why Kentucky issued brand new COVID-19 questions. Some of them are like, are you the head of household? Are you out of work because you are taking care of elderly youth or someone out of school? I mean, all kinds of questions that just have never been asked before. This was a new one that they issued on the 14th, that the pandemic unemployment compensation, they extended it for 13 weeks. Now, this is the reason why I put it in here. I cut out some of them because they had nothing to do with you as employers or HR, but this one does, because they then said in this new notice on the 14th, the cost of the pandemic emergency unemployment compensation, this is the additional 13 weeks after everybody has exhausted everything, may not be charged to the employer of record because the federal government is compensating for all of that. So anyone, if you had somebody on unemployment and they've exhausted all of their unemployment and now they're getting the extra 13 weeks, you cannot be charged for any of that. Your insurance rate can't be dinged for that. This will all be charged to the federal government, so I wanted to include that. The Department of Labor is offering 3 webinars this week with regard to the FFCRA guidance. Some of this is coming back into play because as people are going off of their 8-week PPP, some of you are going to start looking for ways to have people collect unemployment or go on other payments if you don't have work to do or you need to lay off part of the time. So I just thought I would put that out there because they just put that on there Friday. They didn't tell me the times or tell us the times, but they are going to do it. And then OSHA is continuing its industry-specific guidance, which I covered last week. They included the dental industry this time, rideshare, retail pharmacy, and nursing home and long-term care. The nursing home and long-term care was the main one that I put on here because I know that there are a lot of the nursing home and long-term care on this call that have been sending questions to me time to time, and hospitals and so on. Take a look at the OSHA because they have a whole list of question and answer frequently asked and guidance for opening certain industries, and these just happen to be last week's. I think they're coming out with a whole lot this week as well. So those are the updates. I know that you may be going, well, wait a minute, the such and such industry had some. I looked through all of those. Some of them are a little bit really specific to certain industries or certain issues, and they're not broad audience things, so I didn't include them all. So we're to the point of any kind of questions and answers, but also while we're on it, I'm gonna put this up here. We've got an activity code 523696 for HRCI 523696, and the SHRM activity code is 20-Quail Yankee Nancy Quail Whiskey. So I want to spell that out because it had whiskey at the end of it. So those are your codes, and then we'll just do, I'll leave it up there for a while, but let's do questions and answers. And I'm fine with anything you, Lyle, you or your group want to chat about, or anything that has popped up about anything, whether it's the topics we covered or not.
Well, you covered a lot of ground today, Jim. We appreciate it.
And I know it kind of sucks to hear the same person's voice the whole time, but honestly, when the PPP guidance came out Friday, I sent a note, as Lyle's aware, to Lyle, and I said, I don't know that we can get through everything in 2 hours. And guys, we barely touched the surface of the PPP. There is no guidance out there. The AI, CPA, the Forbes magazine's guidance is all over the map. There's nothing else out there. So I spent all weekend to try to cut it down so I wouldn't keep you all sitting there trying to figure out what tax people think. And I'm not a tax specialist. So I apologize for listening to my voice the whole time, but there was a heck of a lot out there that we need to do. So have at it, Lyle.
One other question that's come up a couple of times is, what's the employer's responsibility for contact tracing, for tracking things? Has there been more guidance on that? Do you want to add some? I've got some thoughts about it, but go for it.
Yeah, we talked a little bit just a minute ago about it. Sorry, I'm trying to get over to my screen to pull it back up. There was some guidance issued by Kentucky on what he intended by the, well, I must have closed out of it. On the Kentucky page, he had on there, I'm gonna drag it over here. We're not on a page anyway, so let me drag something over. And then I'll do a type searching for it. So this is the broken page. Everybody's already heard about that. So yeah, there's some guidance on there right now from at the bottom of his page about what he intends. Now, basically, as we talked about from week 1 on, the guidance in a nutshell is make darn sure that you are reporting to your state and local authorities any positive and sending people to your PCP provider. That's the main guidance. But in the minimum requirements letter, and down at the bottom, there is health requirements and temperature checks. And then right below that is acting on it and what you're supposed to do, and then contact notification. It's the process of identifying, contacting, and supporting people who have been exposed to a disease. It is a critical part of our effort to stop transmission. Public health officials will interview patients who have tested positive to learn about their recent contacts. Officials will then reach out to all of the close contacts of COVID-19 positive persons to inform them of their status and risks. So I think what you are responsible for doing is basically keeping track of who your employees are in contact with, so that if they then become positive and the health department knocks on your door virtually and says, Lyle Hanna, who has he been in contact with because he's tested positive? You have the ability to say, here are the people that we believe that they were in contact with. Here are the people that work in the same area. so that they don't have to wait 24 hours to get the notifications out to people who potentially had contact. So that's your contact notification requirement to them. Now then, I believe as HR professionals and as employers, you have an added responsibility to notify employees who may have been in contact with a positive case. And that's what we talked about before. I think that you have an obligation to alert anybody who's in the same stall, anybody who shared the same common place, anybody who had a close in contact meeting that you may have been exposed. You are to maintain, privacy information related, but we want you to get tested and we need you to be quarantined for the requisite time period. So I think that the Healthy at Work contact notification, where they talk about what's going to happen, they really didn't say what you're supposed to do, but I'm pretty sure that what's intended there is keep a journal of who your people are in contact with. So if something happens, you can come back and say, well, here's the list, here's who they had contact with, and we will assist in alerting each of these people. That's basically what they're meaning, is a prompt notification of anyone who may well have been in contact with that person. That's all.
I kind of see it as two levels. One is the people in your own organization you should figure out pretty quickly, and you can help facilitate that. But outside your organization, you can help collect who they've been in contact with, but you get that to the officials. And Dr. Humboldt kind of said that last week.
Yeah.
He has people, let him know, they'll chase it.
And here is the list that they put on. I'm highlighting it. They put a list on that literally is what's their work schedule, where were they, when was the last day they came into work, who could have come into close contact, consider employees who are working nearby, sitting in the same, consider customers, clients, or visitors, and please provide contact information for the employee who tested positive. So that's the gist of what they're looking for. In other words, like I said, it's just a tracing thing. You need to have ready at hand who your person's been in contact with so that the CDC, the state health department can alert those people and say, hey, you might have been in contact. We need you to stay home for X number of days. That's it.
Allison, what else? Any more questions?
Yes, so we've got a question about FFCRA. An organization has employees who are currently out due to sick and extended FMLA. And while they know that they can claim the 2/3 credit or the full credit, depending on the reason for their leave, are they also eligible to claim health insurance, any type of credit related to their health insurance, or is it only their pay?
So it's been a while since I've looked at this, and I apologize, but I believe we covered this in week 3 or week 2. And don't quote me on this. We may need to do a frequently asked question afterwards, but I believe the health was specifically covered within the FFCRA mandate so that, yes, it would be covered. I just, since I've been so focused on the PPP and the Kentucky Health Initiative and the unemployment issues, it's been a month and a half. So I would prefer to pull that and just verify, but I'm 99% sure that when I walked through that, that the FFCRA did include the health insurance as well. In fact, the more I talk about it, the more convinced I am. But I'll pull it just to verify, and I'll tell you what we'll go with. The answer is yes, unless you get something on the follow-up questions that says, wait, hold on, because Jim said he screwed up. So the answer is health is included. Because I do recall talking about that, but I just need to, I always like to double check on that. So the health benefits included in the payments, that's a question. I'll make sure to verify that. I apologize. I didn't have FFCRA on my radar.
Perfect. And then they have an employee who has exhausted FMLA leave, so they've been off on maternity and they're about to return. However, they have no daycare, so they would be eligible for the 80 hours of the emergency sick leave, just not the extended EFMLA, correct?
So they don't get any more FMLA leave, as we talked about. You get 12 weeks, you don't get any additional. the sick leave, if she qualifies under the definition of the sick leave or the sick leave itself, then she would be able to. The reason why I hesitate is the child care fell under the 2/3, and it fell under the FMLA, EFMLEA, and the sick leave was a little bit different. So if she qualifies under the sick leave, then the answer is yes, she can get the sick leave because they are mutually exclusive. They are not, you use one and then you can't use the other. But I would verify that she actually still qualifies, because remember, we walked through the different angles of both of those. There are a little bit different nuances for the FMLA 2-week sick leave, or the FMLA sick leave policies. And I just want to make sure there was a little difference in there about child care. So I don't want to say absolutely. I could pull that too and verify, but that one was a little bit more nuanced. So I'll make a note of that too.
Okay. Great. And then we had a question. Someone says they're working with companies that they're aware may not be complying with mandates. Other than reporting them to the hotline, what other recourse do they have, or what other next steps can they take to ensure their safety?
So if you're a customer, I want to make sure we're talking, there's two different things that you could ask here. If you're a customer and you go into a location and they're not adhering to it, there's a tattletale link on the it's actually in this document at the top, I believe, in the letter. May not be on here. There is and I don't mean that derogatorily, but there is a tattletale link if you're aware of, here you go. If any entity fails to comply with this guidance, they can be reported to KY Safer at 833 KY Safer or kysafer.ky.org. So there's your tattletale. So if you're a customer, that's what you can do. If you are a business and a co-business is not adhering, one, you could always use the reporting line. Two, you could refuse to engage in activities with that entity, including if they're a vendor, you could refuse to engage in vendor relations. This could potentially allow you a breach of contract without breaching the contract. So throwing on my legal hat here and taking off any HR, let's say you have a contract that you've never really liked, but you've been stuck with it because you signed it for a 3-year period, and you find out that the people on the other side are not adhering to social distancing requirements, masks, or whatever else, and now you're having to receive product from that entity, and they're
Whoop.
Just lost you.
We lost your voice, Jim.
uh-oh.
There we go.
There you go. You're back now. We lost your voice that last
Is it
sentence.
back?
Think
Yeah.
so. Lean in.
All right. So I was saying is that you could use a breach of contract, notify the people that they're in violation of a state mandate. If they don't fix it within the term of the contract or within the time period you're required to, you could cancel that contract. So if you have bad contracts, you might be able to use this to your advantage. Also, for those that are in the travel industry or anything else, now's a great time to use that little known phrase called force majeure. Force majeure is that if there's an act of God or something that occurred that nobody could have possibly anticipated, and I used that for a big company on a hurricane with a conference that was taking place in the middle of a hurricane. As soon as the president declared a natural disaster for District of Columbia, I pulled that out and got out from under a contract altogether, and we still ran the meeting, but we didn't have to worry about minimums, food and beverage, and so on. So take a look at your contracts, because all of them have a force majeure in them, almost all of them. And basically what that means is if an act of God occurs, you can get out from under a contract. That includes some of your business leases, your landlord leases. You may be able to get out from under some of those or parts of those as well. So everybody should be mindful of that. Thought I'd throw that out there.
I wonder if that works for a wedding.
Huh?
I said, I wonder if that works for a wedding. I'm just kidding. It's time to wrap up. Allison, anything else? We got a couple of minutes. Let's cover it quickly.
Yeah, we can do two really quickly. The first, somebody just wanted to confirm the titles of the folks at unemployment that they should send their Workshare applications to. So that would be Executive Director Muncie.
Yeah, that was Executive Director Muncie, Deputy Secretary Josh Benson, and the others, quite frankly, I can't remember their names because all I'm doing is block copying them and putting them on the next letter. So I apologize. But I'm sending it to the points of contact that I have had at any point in time, and I'm literally answering all 23 questions with the details and spelling out the Kentucky Administrative Regulation. But I would get on that if I were anybody looking at Workshare because of the limited amount of money that's there.
No.
Perfect. And then we've got two kind of scenario questions about doing the medical screening. So an employee is identified as being in close contact with a positive, but they get a test and it comes back negative, and the health department does not recommend quarantine. So they are able to return to work, correct?
Yes.
Okay. And then an employee calls in and says she has flu-like symptoms. Telehealth put her on a 14-day quarantine, but didn't actually require a test. Can the employer require a test before she returns?
Yes. You can require a return to work, and now under EEOC guidance, you can require a COVID-19 for all employees or employees coming back from sick leave. EEOC has said you can literally test everybody if you want, or you can require a test of everybody if you want.
Wonderful.
All right. Hey, thank you all very much. All of you that hung with us this entire time, good work. We appreciate it. Next Monday is a holiday, so we're not going to be on next Monday, but we've got so much to cover already. We're going to be on Tuesday, 11 o'clock next week. Please don't hesitate to send your questions to us during the week. If we can answer them during the week, we certainly will. We'll be getting out the notes from this meeting very shortly. I hope everyone has a wonderful holiday coming up, and we look forward to reconnecting next week. Anything else? Final words?
I don't have anything else. I think I've said enough. I apologize. It was just me, guys.
We look forward to next week, and we hope everybody has a good weekend coming up, and God bless each of you. This is Lyle Hanna signing off. No more COVID. Keep moving forward. Thank you.